Hello everyone, welcome to the Elliott Wave YouTube channel. This is Henry and today is Wednesday, January 18. The time is around 3:30 a.m. GMT. Today we're gonna be looking at the chart of GDX. This is Gold Miners ETF. We can see right here we ended with 2 in the intermediate degree here at $27.54, and now looking to be doing with 3 on the upside. And the rally here is in 5 waves, impulsive structure here. We have 1, 2, and then 3, 4, and then now looking to finish with 5. And once we finish this with 5 up here, we should be ending 1 of 3. Okay, we should be ending 1 of 3, and then we should be getting a 3 pullback to correct this entire cycle. Alright, so the correction should be in a 3-way pullback, correcting this entire cycle. But as long as we stay above 27.54, this wave 2 should be ending in 3 swing. Again, typically when a cycle ends, it can correct about 50%, 60%. Minimum is around 40%. Okay, and once we finish the correction, it should continue to go up. So the main idea here is not so much as it needs to go up one more time or it needs to go down big. The main idea is simply that it is bullish because the right side is up, and 27.54 is your key level. And as long as we stay above here, right, yes, we might change a little bit here and there. But one possible change, for example, 1 could have completed here. We can already start with 2, right? Another possible change is the extension. The rally higher actually can continue to extend without significant pullback, right? So changes can happen, adjustment can happen, but the main idea doesn't. The main idea is that as long as we stay above 27.54, as long as this key level holds, then the main idea is it is bullish. And this is one of the possible paths within that main idea, in that we are ending a 5 ways up from here with one more marginal high, and then from there we can get a 3 pullback first to correct this rally before it goes higher again afterwards. All right, so that's basically the idea. Let's zoom out a little bit to get a context on this move. If I look at the daily time frame over here, let me remove all the count here. Now I think let's copy this wave 2 here. This is the wave 2. Okay, so if you look at the daily here, you can see we formed the low on September 26, right? And then from there we rally. Now first of all, if this is wave 2, you know this is wave 1, right? So you have what looks to be, if you look at the rally from September 26, you got this 1, 2, and then you got another 1, 2 here, right? So the way you label this is 2 ways, because if you count the swing, technically this is 1, 2, 3, 4, 5 swing, right? So the way you can label this is either either this is 1, 2, 3, 4, 5, right? If this is 1, 2, 3, 4, 5, then what happens is this cycle will be finished, and then not only that you're going to be correcting this, which is what we are calling here, not only that you will just, because in the current view here we are looking for something like this, and then the correction here in this wave 2 is only going to be correcting this wave 1 rally here. But if the alternate alternate view plays out, then this correction, then we could be finishing this entire rally as a 5 ways, 1, 2, 3, 4, 5, and then not only that you're going to be correcting this, you're going to be correcting this entire rally, and that implies a bigger pullback like this because you are correcting this entire cycle, right? However, there is reason to think that most likely is not the case, and the reason is the momentum. Because in a 5 waves, with 5 should come with the momentum divergence. In this case, if you look at the momentum, this one, it does not come with the divergence. This one actually is breaking above all the previous RSI here, the momentum high. And also, if you downgrade to the 4-hour time frame, again, I'm copying the 1 and 2. If I look at the momentum, you can see this one here is higher than all the previous peak in the momentum. So what that is telling me is that this, if you want to count this, let's say if you want to count this as a 1, 2, 3, 4, 5, right? Let's see here. Let me double check to see if this is below here. This low is 22.49. This low is 22. No, this one is higher than this. Okay. So if you want to count this as a 1, 2, let's say 3, 4, well then this 3 and this 5, it needs to have a divergence. But you can see clearly somewhere here the momentum erased all the previous peak. So this is not with 5 as a result, right? So that's why it is less likely to be a 1, 2, 3, 4, 5. And therefore, we don't need to worry that the pullback is going to be a big pullback to correct this entire rally, because it doesn't look like it is a wave 5. So if that's the case, then this is the view at the moment. So then how can we make sense of this move? Because it is a 5 waves, then you can call this as a nest. 1, 2 in the higher degree, like this, in the primary degree. Right, and then you got another 1, 2 again. Now this is not a corrective structure, and that's the base assumption, because if it goes down again, it can potentially, the extension to the 100% is gonna go to 0, which is not gonna happen, right? Gold miners are not gonna go to 0. So that's why this is the base low on the 2022 low, right? And from here we have a nest, right? So again, that's why the key level at the moment is over here. That's the key level in the short term. Now the key level in the medium term, longer term is here, but this is the key level in the short term. As long as we don't break below, we continue to favor more upside. And if there is any pullback, right? If there is any pullback, that pullback is gonna be finding buyers every single time in 3, 7, 11 swing. Okay, so for more updates, regular updates on GDX or any other ETF, stocks, indices, Forex, commodities, you can check our service. We have 14 days trial. The link is in the description of the video. I'll see you all again next time, and have a nice day, everyone.